Huge announcement for everybody in cryptocurrency right now. You must make a decision. You must look at what's going on. You cannot just ignore everything. Close your eyes. You're going to hate yourself for that. I'm going to provide you guys with the bullish and bearish case for all of cryptocurrency. Bitcoin, I'm looking at macroeconomic conditions. I'm looking at recent news. I'm looking at adoption news, supply shocks, people with credibility. It's going to be a very detailed video on everything that's going on in crypto. So let me just get right to it. Not going to beat around the bush. If we come over here, the Netflix stock is looking pretty tragic. And we see insecurities in a lot of different areas in the stock market. Now, a lot of people are claiming that Bitcoin is correlated to the stock market. And I do believe that this is true. Now, there's a couple of other things I want to highlight. I don't think it's black and white and it's perfectly correlated. It's going to follow the S&P 500 and everything that's going on in the traditional finance world. But I do think they, to a certain extent, follow each other, right? Because people are looking at crypto as a risk-on asset. I don't know if that's going to be that way forever. But what I do know is right now they are looking at that. If we look at Bitcoin's price, you could see that we're breaking maybe below this important line of support here. Now, it depends on if you draw it by the wicks or not, right? If you draw it by the wicks, we're kind of still good money. But if you're drawing it by, the way I just drew it, not really. And I did say that we have a potential to wick down. We wick down here, but it wasn't aggressive enough. Maybe we can come down to about $37,000 Bitcoin. In my personal opinion, I don't think that would be too much of a bad thing, and it doesn't really scare me that much. Now, if we look at UST dominance, right? USDT dominance, you can see we're making our way to all-time high. Now, I've made videos on this. You can go reference the old ones. But basically, USDT is serving as a safe haven in crypto. When people get out of cryptocurrencies, they typically go to USDT. So it's a really good indicator as a countermeasure for Bitcoin. So when the dominance of USDT or Tether starts increasing, then you could see that Bitcoin will decrease. Now, I did say in my video that we probably making our way up to here, and then we would reject off there and move our way down. And then when we were moving our way down, Bitcoin would typically do well. And we saw that happen here. Bitcoin did really well here, and we saw that happen here. So it could be, a move to 37K BTC. We could see USDT move up and then Bitcoin come down to 37, and then we get that bounce. That's what I think is the most likely, in my personal opinion. Again, I'm going to attack it from multiple angles. I'm going to attack it from macroeconomic perspective. I'm going to be looking at Bitcoin, Tether on a deeper perspective, on-chain metrics, Ethereum. This is going to be a really good video, guys. So pay attention, sit down, take some notes, and subscribe to the best channel on the internet for cryptocurrency. Also, one thing I wanted to point out very briefly, it's kind of weird for altcoins. We just don't know what's going on. Now, from a price perspective, we don't really know what's going on. But from a qualitative perspective, I've been seeing a lot of interesting things happen in the news. We did see Coinbase come out with an NFT exchange. We know that this is going to be monetized on Ethereum. So this is really good for altcoins. We also see Coinbase acquiring other crypto exchanges. This is a sign that they are trying to move in an aggressive way. So I don't know if Coinbase thinks it's bearish or not, but I think that's interesting. We see LimeWire raising 10 million to grow their token. Again, companies are still being acquired and funding is still happening. I thought this was also a really cool and very interesting decision. So Ukraine basically bans cryptocurrency purchases in their local currency, but they allow people to transact in other currencies. What does this basically mean? They're essentially very scared that capital outflows, right? People are going to flee from their local currency into crypto. They're very scared that's going to happen, but they also want their people to have some type of safe hedge, right? Which is cryptocurrency. They want people to be able to use other people's dollars to buy crypto and survive off of that, but they don't want their local currency to be hyperinflated. Now, I think this is very interesting because when analyzing the macroeconomic environment all over the world, there are countries that are way worse than in America for sure. And every time we come to ultimatum events or these events where you're kind of forced into a corner to make a decision as a country, typically cryptocurrency seems like it's just the route to go. And so you can clearly see right here two things. They don't want people leaving their currency and hyperinflation to increase by jumping into crypto, but they also want their people to kind of be saved. So very interesting decision there, and it does shed a lot of light on a lot of things. Now, this is big, right? We see Nike doing a collab their first Ethereum NFT metaverse sneakers. Again, like I don't know what it is, but pretty much every major company, I think the NBA just recently got in, but the NBA has some issues with their platform. I don't know exactly what went on there. Don't quote me on that. But for some reason, we see all of the biggest massive companies on planet Earth moving into NFTs still, even when NFTs are being called scams and there's all types of negative press around crypto, they're still moving in. So I do think for some reason, there's going to be a big push to Ethereum, even with the uncertain macroeconomic conditions, even with everybody, going risk off and the hawkish Fed policy, which we'll be talking about a little bit more. For some reason, there's just still a big push to specifically Ethereum. And there is also centralization, not centralization, but there is also, censorship that's happening on Ethereum. So it feels like the powers that be think they have control over Ethereum, which I do agree they do. So this might not be good for Bitcoin, but for at least Ethereum, there's definitely a big agenda pushing ETH as hardcore as possible. So this is good for all of crypto. Now, let's go into some macro because I did make a live Q&A with the people I respect in the Fundamental Secrets. If you guys want to get access to my coaching, my coin calls, and my professional coaches, all you have to do is check out the pinned comment below. It's $5 for 5 days. You can come to our Q&A, see how we hash it out because they were very bearish and I'm kind of bullish. So it's nice to see the difference in opinion and it makes me better because when they're telling me certain things, I can go and really double down on my research. And this is how this video is kind of created. So these environments where you can, share your opinion and get different opinions from different people is very, 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 very beneficial to someone's learning curve in cryptocurrency success. I'm gonna tell you right now, if you are operating in a closed vacuum and you have more than 3% of your net worth in crypto, you are doing yourself a disservice. If you have no one else that you are trading with or learning from, and if it's just like your friend that's broke, that's bad too. You should be involved with a community with professionals. You should be looking at professionals, people on your level and people below you. All of this is beneficial to your education and learning success. And investing, day trading, scalp trading, whatever strategy is, you need to bounce your opinions to other people. You should definitely take advantage. $5 for 5 day, pin comment below. But they basically brought this to my attention. So we see the U.S. government bonds 10-year yield going absolutely insane to the upside. Now, when you're looking at this, the U.S. government bonds is basically, it's not exactly this, but if I were to sum it up, it's confidence in the U.S. government. When people buy 10-year government bonds, they're confident in the U.S. government. And you can see that the yield is increasing. Now, when the yield is increasing, this means that people are becoming less confident because they're buying less. They're buying less U.S. government bonds. When the yield increases, that means less people are buying. So this is showing insecurity. It's showing a lot of insecurity. Now, we have a couple of things happening, right? We have the rising inflation. Inflation is becoming a definite issue. And the rate hikes. Now, if you don't know what these things are, it's very simple. I'm gonna make it very simple for you guys. I'm also gonna try to educate some people on macroeconomics. We're getting a little bit deeper into that because I do think it affects the markets in a significant way. I don't think it's 100% correlated, but I think it's very beneficial to look at the macroeconomic environment, everything that's going on, financial policy, everything like that. Just to put it simple, we are basically moving in a period of hawkish Fed policy. So what that means is the SEC, a private company, is trying to stop inflation. They want to stop inflation. They want to kind of force the United States into not a recession or a depression, but they're slowing down spending, right? And when this happens, typically risk on assets do bad. People start de-risking and de-leveraging and getting out of anything really. They're just trying to take profits and consolidate. So you'll see like stocks, like we see Netflix just getting destroyed. This is a perfect example of de-risking, right? It's a very risky. It's a tech stock, so you can consider it risky. But yeah, so people will de-leverage and play it safer. A lot of investors will play a lot more safe, especially when they're trying to stop inflation. So this is one example of that. So we're looking at the 30-year fixed mortgage rate on average in the United States. You can see that it's going up. It's becoming more expensive to borrow money. This is, again, hawkish Fed policy. As they give rate hikes, right? As they increase the rate hikes, it's more expensive to borrow money. People start consolidating, right? And then here's another indicator. What we're looking at here is the daily home builders and suppliers bull 3x shares. Essentially, this is an indicator for housing, building houses, and you can see it's tanking. The housing market is showing a lot of insecurities. I know you guys are watching all the financial YouTubers. They're getting a little bit scared of the housing market, right? They're just getting a little bit scared of the housing market, and you could see a lot of insecurities, with home builders and the supplies and everything that's going on. So what's happening is people again are de-risking, right? They're de-risking. They're selling their real estate, right? They're getting out because the cost to get out money is just way more expensive. Mortgage rates are going to get way more expensive, so they're trying to de-risk right now. This is also a good indicator to show that people are de-risking. ARK Innovation ETF is basically just shows when people, it's just a really good indicator. I'm not going to get into these things because it is hard to explain, but the ARK ETF is basically a really good indicator for risk on. So when this is going up, people are taking more risk. And you can see it's been on a pretty steep decline for the last year or so. It's down 67%. So people, I'm just showing you clear signs that when there's hawkish Fed policy, when the Fed's like, hey, let's stop inflation, let's rate hike increase, right? Let's make the cost to pull out money more expensive. People start to de-risk, and these are signs that we are de-risking. Housing market, this innovation fund, things like that show, hey, investors are scared to invest, is what I'm saying. So yeah, that is a big problem for Bitcoin, because we can see that Bitcoin's been very correlated to the S&P 500 and the stock market, right? So where does this change? Where does Bitcoin separate itself? Because I'm not completely convinced that it's just going to follow the stock market, in my personal opinion. I think people are woke to a certain extent. It's funny because we see Elon Musk talking about people are woke and stuff like that. And then the price of Netflix stocks dump, right? So, I think people are getting smarter and smarter, investors as well. And I also think that Bitcoin and cryptocurrencies are a 24/7 market. And very convenient to invest in. Like it's really hard to, like, I'm watching when people that work for me get out of house. They're buying a house right now. It's like it's taking them months. It's taking them months, a lot of paperwork and a lot of back and forth to buy the house. But in crypto, it can take you a couple of seconds to buy Bitcoin, right? So I think investors are number one, becoming smarter. They understand inflation's an issue, and they also understand that the Fed can't just patch this up with hawkish Fed policy, and it's probably way worse than that. And I think that maybe Bitcoin in the future, maybe not the short term, maybe not right now, maybe we still get that, big move to 37. Maybe it even goes lower than that. I think Will in our group was saying it might go even lower than that. But I think in general, investors are getting smarter. And I don't think they just look, I think Aaron or Will in our group said that, they might move towards bonds or whatever the case is. Maybe that is the case, but I think like it's not as appealing as, a separate asset class called, crypto is just a separate asset class, especially when every big major company, the NBA, Nike, all of these big companies are moving into crypto. So I don't know. It's hard to tell. I will say in my head, I'm more bullish than bearish, and I've been talking about that on all my recent videos. So pay attention to that. Now, if we look over here, we see Morgan Stanley saying Bitcoin Lightning Network is superior to Visa. So we are getting capabilities on Bitcoin and Ethereum that are significant. This was interesting. The world's 10 richest men increased their fortunes from 700 billion to 1.5 trillion during the first 2 years of a pandemic that has seen the purchasing power of 90% of humanity fall, over 160 million more people forced into poverty. The real pandemic is the growing wealth gap. Yeah, and honestly, there's been some big signs of the growing wealth gap for a long period of time. And, it's because the current monetary system is fixed. And that's the point I'm trying to make is like, yes, we're very correlated to the macroeconomic conditions and what's going on with financial policy in America. But I also think that what's going on in financial policy in America is becoming weaker and weaker as a way for people to look at it in a significant way. They're not looking at it as serious when they see things like this, when there's a really high potential for the United States world reserve currency to be dethroned. They will look at America, and investors will look at it in a less serious way. I think they want something as an alternative. It makes them feel safer if they can find something that's an alternative. In my personal opinion, this is what I've been seeing. Now, this was really interesting from Plan C, which is he's been getting really popular lately, and I really like what he is showing here. He's looking at UTXO realized price distribution, and he's looking at, and I talked about this in my other video. I want to dive a little bit deeper. These big sell events, I guess you could say, you can call it support We see the COVID crash, black swan bottom, 900,000 Bitcoin changed hands right around this event. So when COVID had this whole thing happen, a lot of Bitcoin changed hands to long-term holders. And we see that actually happening right now. That's basically what's going down. Okay. So we have a lot of like short-term investors that are kind of getting rid of their Bitcoin. They're getting a little bit safer. And Will is more of a short-term swing trader type of person. He has an investing stack as well. But what I'm seeing right now with on-chain metrics in general, is they're changing hands, right? The traders are kind of getting out because they're getting scared. But like the big whales that don't care, that are more investor types, are accumulating large amounts of crypto. And we see this zone here at $41,000 BTC. This is a mid-cycle accumulation period. You can see here something very similar to the crash or black swan bottom over there. So I thought that was very interesting. And that's basically the theme of what's going on. Also, prices, we could look at it from any way, shape, or form. The housing market looks like it's probably coming to a downturn, and prices will get cheaper. But again, Bitcoin, I don't care how you look at it. Since Bitcoin started, it's probably better to buy Bitcoin than a house, like pretty much through the board. So I know a lot of people are seeing this. A lot of investors are seeing this. They're deleveraging out of houses, and they're like, okay, what am I going to buy now, right? And I think, again, like, I don't know how many times I got to tell people, no matter which way you cut it, like no matter what happens short term, these people with a lot of money want things like, they're looking at this, right? They're looking at housing market prices versus Bitcoin and the convenience of Bitcoin, and buying Bitcoin. It's so freaking convenient. Like as they deleverage, it's so convenient. They could just literally pop open an app and start buying Bitcoin. I don't know. I think things like this will really change the tide in the cryptocurrency specific, and maybe it decouples. Like, I don't want to say decouple because it's kind of a meme at this point. Like, cryptocurrency is pretty close to traditional finance, but I will say that something's going to happen, and it's not going to be the same as the S&P 500. It will not be. I don't believe it'll be lumped in to stocks. Like, it's not going to be the same. There's going to be something different. Now, this was also the theme of on-chain metrics, which is balances on exchanges. They're leaving exchanges. The amount of cryptocurrency is leaving. Supply shock. You get the gist. People always say it. Exchange net position change. You can see from this red mark here that a significant amount of Bitcoin is getting off exchanges, which basically highlights that they don't want to sell. They're getting it off. They're putting it on cold storage wallets. They're saving it. I've said this over and over again, and we see significant levels, guys. Significant levels. Look how big this is. And this is whales. This is smart money. This is the point I'm trying to make. Is it's like, look, like maybe we see some downside for Bitcoin. That's fine. But like, I want to trade with the whales and the smart money. And it does look really bad, but I usually typically do the exact opposite of what everybody else is doing. So if it looks really bad and everybody's getting bearish, I even see it in my comment section on my videos. Like, I've never, for the first time in a long time, I've never seen people say in my comment section publicly that they're bearish. Typically they will fight me. Like, if I'm saying I'm bearish, they're fighting me. They're like, no, bullish, bullish, bullish. Bitcoin's the greatest thing ever. And they get mad if I ever say anything bearish. But now it's like, I see people leaving bearish comments. It's like kind of getting weird. So I typically do, again, the exact opposite of what everybody else is doing. When everybody thinks this is going to happen, usually it doesn't play out that way, especially for Bitcoin, So everybody thinks right now that it's correlated to the hawkish Fed policy. There's going to be hawkish Fed policy. Inflation's an issue. They're going to lower the amount of spending in the United States. It's going to cause a small recession. There's going to be a recession or whatever the case is, or maybe we're already in the recession. And Bitcoin's lumped into a risk on asset. It's a risk on asset. People don't want to buy it because it's risky and people are saving. This is basically the overall gist of the market right now. Everybody's thinking. We've seen a lot of crypto YouTubers bearish right now. Everybody's thinking that. So for my head, I'm like, okay, if everybody's thinking that, it can't be that simple. It has to be different. And I've used this to make a lot of money. I typically do it at the bottoms of market. So I see something similar playing out, and I also see whales accumulating. So I don't know. Who do you want to trade with, right? That's the question you have to ask yourself. And then we see Willy Woo saying here, highly liquid supply shock oscillator is at some pretty low levels. So supply shocks can potentially happen. Bitcoin, it is a thing. It is a thing. Supply shocks do happen, and a lot of Bitcoin's leaving the exchanges, guys. This will cause the price of Bitcoin to increase, and I don't think stocks have that benefit. So we could say they're correlated all day, but stocks do not have the supply shock benefit. They don't. The corporate buybacks, they print stocks out of thin air. They print stocks like they print money. And there's all these different ways to leverage, and it's inflated. Bitcoin is not the same thing. Okay, just to be clear with everybody, there is a supply shock variable in Bitcoin. There's less Bitcoin on the market. That is a thing. That is a thing. So people need to pay attention to that. Now, I do want to explain what hawkish Fed policy is, because I've been saying it over and over again. Basically, they're in favor of higher interest rates to keep inflation in check. That's basically the gist. There's a whole bunch of ways they do this, and I'm not trying to get into that. But again, hawkish Fed policy is when policymakers are in favor of higher interest rates to keep inflation in check. They don't want inflation going crazy. Inflation looks a little scary right now, so they're going to try to keep it in check. Now, for all of the people that agree to this narrative of hawkish Fed policy bringing down Bitcoin, let me just really quickly draw your attention to this, okay? Because I think this could be interesting, all right? So yes, there's one way of looking at it. If we look at the S&P 500, which is the top here, S&P 500 index is the top 500, stocks, right? And then we look at Bitcoin. It's looking like almost identical. Like, look right here. We had this top out. We broke to the bottom. Look right here. Top out, broke to the bottom, right? Looks very, very similar. But there's one other thing that I think a lot of people are missing. And let me just open this up so you guys can see it, which is the DXY, the US dollar currency index. So, we see this big area of resistance here, right? And maybe, and it's weird because it's kind of similar to USDT, right? So we have a little move up here, right? Maybe, and what we're looking at, just to be clear with everybody, is we're looking at the US dollar currency index. So this shows the power of the US dollar, right? And typically there's kind of a, not perfectly, but this moves Bitcoin as well. So if we see the US dollar losing value, I think we could see Bitcoin probably do well, okay? So if we look at it, okay, we can see we're coming up on a big resistance point here. Now, if we look at, for example, what I was looking at USDT, very similar. We're coming up on a big resistance point here. So people can start fleeting to cash. I see it in both areas. I also see Bitcoin, again, probably moving down to 37K. It kind of all aligns up, right? So if we do maybe reject off here, we could get a flee into Bitcoin. I think this is probably likely. And I'm not the only one that thinks that. As you can see here, Willy Woo is saying the DXY is overbought, right? So just pay attention, because again, although it's correlated to stocks and risk on assets, I don't think that will forever be a thing. And I also think that if Bitcoin starts decoupling or less correlated or whatever the case is, I think it's going to be fast, and I think it's going to be really hard for people to react. I also think that people with a lot of money don't play those games. They don't play those games. They play the long game. They're like, hey, Bitcoin is looking kind of good compared to housing or any other investment in the world. Let's just not think about it and buy as much as we can and let it ride. That's usually how they're not trying to time anything. They're not trying to time anything, right? They're just trying to get what's going to work for the next 10 years. So if right now we're moving into a hawkish Fed policy and people are taking risk off, right? They're going to look for something that's going to work. I don't know if bonds are something in people's heads. I just don't think that's something that is considered risk off right now. Bonds are scary, in my personal opinion, especially when the United States government is at the biggest potential to be dethroned as the world reserve currency. The US is at the highest potential in the history of like the last 94 years of being dethroned as the world reserve currency. I don't know if people want to get into bonds right now. I think they are more likely to get into something that's not correlated or has the highest chance of not being correlated, which is Bitcoin. I don't know. You guys leave in the comment section below. Maybe this is a little bit over your head. But if we look at some Tether on-chain metrics, and we can kind of see, again, the same thing happening. Exchange net position change. You can see a lot of Tether is moving on the exchanges. So for Bitcoin, if there's a lot of Bitcoin moving off the exchanges and a lot of Tether moving on the exchanges, you could assume, maybe this is not correct, but you could assume they're using the Tether to buy something. Let me say it again. They're using the Tether to buy something. So if Tether's moving on the exchanges, they're using the Tether to buy something. I don't know. Think about what I'm saying here. They're probably going to buy Bitcoin, right? And then you could see NVT ratio increasing. This is basically the market cap to have many transactions happening on Tether. So people are definitely using Tether more and more. And if we look at, what we were looking at before, I just wanted to bring it up one more time. Again, USDT dominance. We could make our way up here, but it looks like the Tether's going somewhere. And it might go to Bitcoin, maybe the DXY. gets rejected. This could happen. I do think this can happen. Now, there's a couple of other things I wanted to point out because I think it's a huge catalyst, but there's definitely a huge push towards Ethereum. I don't care if you're, a Pulse Chain maxi or any other altcoin maxi, you don't care about Ethereum. You have to watch it as an indicator at least. I technically don't. I don't have that much Ethereum. I have altcoins right now, but I look at it as a big indicator because, clearly somebody controls it. Somebody controls it and they want it to flourish. They want Ethereum to flourish. As you can see here, the total number of deposits into the Ethereum 2.0 contract, basically, this will allow you to run a node in the future, is increasing and going parabolic. People are just jumping in it pretty aggressive. Now, if we look at net unrealized profit loss, or the new poll, we basically flashed blue very briefly. This is an indicator for tops and bottoms, and it looks like we've been trading in the middle for a long period of time. So, again, it does look not overbought. It doesn't look overbought. Ethereum doesn't look overbought at all, actually. And if we look at the net position change on Ethereum, a lot of ETH is coming off the market similar to Bitcoin, probably even in a more significant way, getting locked in contracts, DeFi contracts. You get the point. The gist here, and maybe it's very confusing for a lot of people, but the gist is they want to stop inflation with hawkish Fed policy. When they come out with hawkish Fed policy, they're stopping inflation, and then the whole market is basically signaled, hey, let's de-risk. This is not risk on anymore. Let's de-risk. When they de-risk, typically, risk on assets do bad. And there's a big consensus that Bitcoin is technically a risk on asset. Although I think right now that is probably true, I also think that investors will likely look at Bitcoin in a different light once they start realizing that the United States, there is no other investment. In the US, there is no other investment. When they start realizing there is nothing else, they can feel comfortable putting their net worth in, or their wealth in. I think Bitcoin is the most convenient, easiest answer, and the most likely to get away or separate itself from the United States financial policy. This is real. This is true. This is my opinion. And maybe it's just my truth. But yeah, you guys let me know what you think in the comment section below. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one.